level, the influencing work that we do at the national level through our British Chambers of Commerce, which is a good segue to introduce Sean to you. So Sean is our Head of Policy at Coventry Warwickshire Chamber of Commerce, and Sean's just going to talk to us just for a moment about some of our policy and our influencing work. Over to you, Sean.
Thank you. So I'm just sharing my screen with you all. Good morning, and I hope you're enjoying your breakfast. Today I'm going to talk to you through some of what we as a chamber have been doing as a lobby network on your behalf. So raising your profile, raising your voice to not just government, but to other senior decision makers throughout our country. And our job is to raise what you tell us, and we value them contributions that you guys make in meetings just like this, so that we can collect that data and on your behalf amplify it right to the very top. And so I wanted to start and give you a bit of a flavour around our local presence. And so here in the Coventry Warwickshire Chamber, we have a branch network, and in that branch network we have 5 chairs, and we rely on businesses coming to their meetings and talking about what it's like doing business in that area, whether it be rugby, whether it be the centre of Coventry, what you guys are up to. And what we do from that, we take that information and we take it to our local members of parliament, we take it to our national ministers, we amplify it right the way through. We also then, as we're going to be talking about more today, we survey you during our QES survey, and that gives us a real flavour of what is happening in the local economy. We find that out, we then share that again. So we can say to the Bank of England, we can say to the Department for Business, this is how businesses are really feeling on the ground. And it not only lets government see exactly what is happening, it also lets us as local informers basically take that to every level. We also have created a brand new forum to be able to increase your voice. So we've introduced a video web link very similar to this called Policy Hour, where we introduce local ministers, the Bank of England, we introduce our Warwickshire District Councils, our police and crime commissioners, former MEPs, so we can talk about Brexit or any business issues you guys are facing. It is our role as a Chamber of Commerce to hear that from you, to take it in and make sure that we're acting on your behalf, whether that be you raising issues directly to us that you want us to solve. There's a good example of a business coming to us having issues accessing their grant from the council because they wasn't deemed a hospitality business. They brought that to us and said, there's nothing we can do about this. Our chief executive raised that with our local council and said, actually, I think you need to relook at this. They relooked at it, and that business now has got their grant. And that is the difference of being able to use this network to benefit you as a business. We also hold these meetings with HS2 so that you can see the opportunities your business will get out of those infrastructure projects that are coming in to our area. This is just a bit of a flavour of some of the calls we've been holding. So it's a number of MPs, the Minister for Business in the top right. We've also got HS2. We've got a number more. We've got lots more coming up. We've got Andrea Leadsom coming up, who was the former Secretary of State for Business, and we've also got the current Minister for Science. Sorry. So do join those if you can, because it's really important to raise your voice. Regionally, so what do we do on a regional level? I sit on our Midlands Policy Group, and what's key around that is we can then tackle what our businesses across the region are facing around giving our thoughts on infrastructure projects. How is it going to benefit you as a business? So that's what we do on a Midlands policy level. We talk about the issues that are facing businesses across the region. Our chief executive, she's already pointed out, she sits on Andy Street's advisory board, so that when we are taking those issues, we can take them directly to our mayor and let him know what is happening. And then we pull that QES data as a Midlands so that we can say, this is what's happening in our region. This is what we're doing here. On a national perspective, so our chamber sits on only on a board called a Rapid Policy Group, and that's only 12 chambers from across the United Kingdom sit on that board. And why that's important is what we do there is when the government makes any form of announcement, this group looks at that and says, how is this going to benefit our members on the ground? What more do we need for our members? And then what we do is we come to you and say, this is what's been announced. What do you think we can do about that? What more do you want? What more would benefit your business? And then what we do, we feed that back and say to Alok Sharma, the Secretary of State for Business, this is what they're saying, this is what our businesses need. And we constantly are looking back to do that. Our policy team at a national perspective meet weekly with the Secretaries of State, whether it be in education, whether it be in the Department for Business, across the Treasury, to make sure, again, we're feeding that information back. And then we've got a global arm as well. So we as a Chamber of Commerce have got 53 chambers from across the United Kingdom. We've got 60 across the globe. And that number is expected to rise to 150 by 2023. So that includes, it's a global voice. It gives you a global reach. And that has been absolutely necessary throughout this coronavirus pandemic. We've been holding webinars, again, very similar to this, with businesses in India, with businesses in Singapore, with businesses in China. And why that's important is businesses can then talk about their phase of the pandemic. They're at different stages to us. They've come out of lockdown. They've had different financial stimuluses from the government. What's worked, what hasn't worked. And when we're sharing this information with one another, we're creating them connections and we're growing together. And that is a key thing around this Chamber of Commerce, is that it's not just we're on the ground. We've got boots on the ground. We're in the meetings for you on a regional basis. Nationally, we're speaking to government, making sure they know what businesses are feeling. And now we're on a global stage as well, making sure that you're connected, making sure you're hearing from what is happening from around the world. And that is a reason why I am very proud to work for the Chamber Network. Louise, that's all from me.
Brilliant, thank you. The policy hours have been a real success, haven't they, Sean? And that's something I would encourage all of our members, all of our clients to get involved in. I think we were the first local chamber to run a policy hour where we invited the Director of Public Health to join us. So rather than just always think about the business issues, we started to bring in those sort of other issues, those social issues of COVID-19. And that was really good to have our Director of Public Health. And also I know Sean has reached out to things like our Police and Crime Commissioner and get people like that on our policy hour. So not always our Members of Parliament, but our Members of Parliament have been really good, haven't they, Sean, in terms of joining us on those events?
They've been really good. They've taken up issues directly every time, and they've been able to answer questions that are really complex and be able to say, we're hearing you. We as ministers, we as government officials are hearing what you're saying, and we are raising it. And it's been a real asset to our chamber.
So as I come to Steve at Prime, I'll give you one really good example of how we've worked with our city, our county, and our members of parliament. We did during British Tourism Week, we did an open letter with the City Council, with Councillor Boyle. I did an open letter to all of the members of parliament across the whole of Coventry and Warwickshire. And that open letter was very much about hospitality, tourism and leisure. It was calling for longer standing support for that particular sector. This was before the summer statement, where of course we heard little bits of support drip out. So we did an open letter. We gave a heads up, clearly as you should, to our MPs to say that, you know, this is an open letter. It will be picked up by the media and the press, and it was. And it got some traction. We were able to follow that letter on with some meetings with members of parliament who wanted to speak very directly to us because of that letter. And then, Sean, we saw a couple of our members of parliament send their views and send that letter directly into Secretaries of State, didn't we?
Yeah, directly.
So that's a good segue, particularly on hospitality, tourism and leisure, because it's something constantly on my mind at the moment, alongside automotive, manufacturing and engineering, and the kinds of long-standing support that we need for those particular sectors as we continue to progress through this COVID-19 hit on the economy. That's a good introduction, a good way of introducing Steve from Prime, because as I said during my welcome, Steve's going to talk not just a little bit about our economic survey work, but hopefully about some reflections on the summer statement. So I'm going to hand over to you, Steve, if that's okay.
Yeah, that's great. Thank you, Louise. Hope everybody can hear me. Good morning, everybody. I'm going to go and just look back really at what's happened over the last 3 months from a an economic point of view and looking at the national economic picture here, not just Coventry and Warwickshire. Then I'll go on to just recapping what was announced last week in the economic update by Rishi Sunak, and just come to an end really with some points or predictions over the coming months for the rest of the year, and how the economy could react to the impact of the COVID outbreak. So, as I said, just starting off with one or two historical bits of data now. The UK's GDP has fallen by 19% in the last 3 months to May. The economy has been hit by the COVID-19 pandemic and the lockdown measures. And in April alone, the UK economy had a record fall of 20.4%. Now, GDP is a measure of goods and services produced in the economy. And obviously, as we were locking down or locked down, you know, a lot of those companies that rely on consumer spend, they were closed. The economy wasn't growing. Some manufacturing engineering businesses carried on. Service sector, one or two companies had to close as well. I mean, our firm as accountants, we carried on, but we had to continue sort of working from home as we are today. So the record numbers in the last 3 weeks are there for everyone to see. Just as sort of a comparison, in 2008, the last recession, in one quarter alone, GDP shrank by 2.1% at its highest. So we're looking at, in April, almost 10 times that reduction. Obviously, 2008, there was no shutdown of the economy as there has been in the last few months here. So to May, manufacturing and house building showed signs of recovery as they started to return to work. However, the economy is still 0.25% smaller now, or in May, I'm looking at May's figures, than it was in February pre-COVID shutdown. Some areas, online sales continued throughout the lockdown period and saw actual growth, which was encouraging, but the main manufacturing and engineering and service sectors, you know, all stagnated or reduced their output. The UK economy now, going forward to the end of the year, is predicted to shrink, and GDP is going to reduce by 8% overall, is the prediction. That may be very optimistic. The UK economy is also predicted to shrink more than any other developed country, which, when I read that, you know, I'm shocked that that's the case. But that is the impact that we're having in the UK, and we've all got to, you know, deal with that in our own way in our own industries. We then look at how the UK get out of this. At the minute, today, this morning, it's been announced that there was 649,000 and more people unemployed or not on payrolls through the months up until March. The months from March. So we're at a point now where we're seeing people being made redundant, companies that are going into liquidation, can't carry on. The weaker companies before COVID-19 are seeing the impacts of lockdown and having to close businesses down. A lot of major UK companies we've seen make redundancies already. They've not continued to furlough people. They've made decisions to make people redundant now, looking ahead 12, 24 months. A lot of businesses have restructured, starting to adapt to the new landscape and how employment will look in the. It's a point where we've got to have flexible working regulations. Not sure how easy that will be when we've got people in employment have got to have security. It's going to be difficult to work that one through with the government. But we're looking at some sort of recovery over the next 5-6 months to the end of the year. The economy, or GDP, did slightly grow in May, surprisingly, as industries and businesses started to reopen. But we're now predicting that the V-shaped recovery that was talked about sort of April time may not happen. It's more likely going to be a U-shaped type recovery through the rest of this year, next 12 months and beyond. And predictions are that we won't be back to pre-COVID levels in the economy till 2023. So you're looking at a 4-year recovery there from 2019 onwards. It's not all doom and gloom, obviously. You know, people are still working, people are now reopening, economies are starting to pick up. People I talk to, clients at work, I have at work, you know, there's various sectors that are still struggling, retail being one of them. And we'll go on to that in a little bit when I look at the Chancellor's announcements that some areas of the economy weren't particularly supported with the announcements last week. So, you know, that's disappointing, but we'll get onto that in a short while. We've obviously got to think about Brexit coming up as well, which at the minute we don't know how that's going to affect businesses with the impact of coronavirus, international trade, how that will be affected with the agreements that the government are going to come up with. You know, what position does that put us in? As I said earlier, we're one of the slower recovery economies of the developed world. So is that going to put us in a weaker position when it comes to trade negotiations? We'll just have to wait and see. But you know, it could be almost a perfect storm come the end of the year. We just don't know. Just moving on then to the announcement last week. Rishi Sunak stood up and gave us an economic update. One or two measures that were predicted did come to fruition, and then one or two that were predicted he didn't sort of deliver on. The packages that the government have now given us, when we look back to March and the budget, we were really pleased that Rishi stood up and gave, you know, a number of packages to help businesses at the start of the lockdown, and well, it was even before lockdown, but the start of the pandemic. And he'd given a package of £18 billion worth of government assistance. Now, after 4 months or 4 months later, we can see the government are spending £300 billion. So you look back at what was done in March, and it's really a small pittance, really, compared to the assistance that the government are giving out now. And you know, obviously, we didn't know how the pandemic was going to spread and how the economy was going to react, and when shutdown would happen, if it would happen at all. So, you know, we were talking earlier, if we had crystal balls, we'd all be, you know, much wiser. But these things are unpredictable, unfortunately. But the government's package has now reached £300 billion. You know, that's a very large sum of money that they've got to borrow or find from somewhere, and that could lead to increased taxation and a strain on businesses in the future. So we'll just go through the economic updates now from last week. Just the key areas, really, the highlights. The main two target areas were to control the levels of unemployment and create jobs, encourage consumer spending as well to aid the recovery in the hardest hit sectors. So on the jobs front, unemployment being the biggest challenge, as we see today with the figures coming out from the Office of National Statistics, it's no surprise that some of these measures were put in place. So first of all, there was the job retention bonus. The current furlough scheme has been has already supported 11 million individuals. However, it is not sustainable and is coming to an end in October. It's not being extended. It's not being extended to certain sectors, which we'd hope for. But to encourage employers to bring back furlough workers, which is key, there's a new job retention bonus of £1,000 per employee, as long as they're brought back from furlough and they stay employed until the 31st of January 21. And then payments of this £1,000 will be made in February. There's also a kickstart scheme the government have introduced to create high quality placements aimed at young individuals in the economy, 16 to 24-year-olds, who have the highest risk of long-term unemployment. The funding will cover 100% of their national minimum wage up to a 25-hour period per week, and this is for 6 months. So that will be a big incentive for employers to bring on young individuals at no cost to their business, basically, for 6 months, and see if they can then, integrate them into their workforce and take them on after that date. High quality traineeships, another announcement. Funding will be made for placements for these 16 to 24-year-olds at £1,000 per trainee, and apprenticeship payments as well of £2,000 will be available to employers who hire apprentices below 25, and £1,500 for those over 25, and that's available from August, and that goes again all the way through to January. On a more tax side of things, so to help the economy recover spending, we've got a stamp duty decrease. So we're looking at stamp duty land tax cuts with immediate effect, so from last week until March 21. So the nil rate band on purchasing property, for example, will raise from £125,000 to £500,000. So, there's a estimated £4,000 saving there for an average sort of house purchase. So, it's going to save the individual. It's going to hopefully increase the spend of the individuals when they move house to renovate the property, or look at putting into local trades to help them improve their property as they move in. Furthermore, there's encouragement for homeowners and landlords to spend more on their homes and support green jobs. A Green Homes grant of £5,000 per household is going to be available to make homes energy efficient. Lower income households will also receive a grant of £10,000 covering up to 100% of their costs, which is great news. Again, stimulating the economy in that green sector locally. Another big announcement was VAT, helping certain sectors, hospitality and tourism. So we've got a couple of sectors there that have been hit by the COVID outbreak really hard. Obviously had to shut down, possibly making takeaway supplies to passing trade, but that's about it. Nowhere near full capacity, and still won't be for a long time. So they're facing severe financial difficulties, and they employ over 2 million people in the sector. So it's a sector that does need assistance on both fronts. And to encourage demand here, the government have had a temporary VAT cut of from 20% to 5% introduced yesterday, all the way up to the 12th of January 21. And that will be on to following products. So food, non-alcoholic drinks, unfortunately alcohol's not included, accommodation and admission to those tourist attractions. So ticket prices, reduced by 15% VAT there. A lot of companies have now come out and said they're going to pass those VAT reductions on to consumers, which is great news. Obviously that'll help stimulate the economy, I think, more, rather than the businesses that then make more of a margin if they think they can keep hold of that sort of 15% VAT saving. On top of that, for the hospitality sector, there's an Eat Out to Help Out scheme introduced, which will support the hospitality sector from, I think it's August 2020, just for that month, and it's going through Mondays to Wednesdays for you to be encouraging yourselves to go out, eat out, get a discount of £10 per head on food and drink, non-alcoholic again, I think. So that's they're the main announcements that were made with regards to the economic summary update from last week. As I said earlier, some sectors have missed out. particularly retail, aviation, big sectors that have been affected massively by lockdown, and there's no additional help for them. I thought there may well be an extension of the furlough scheme in certain sectors, but not to be. So you can only predict that there'll be bigger sort of redundancies come end of October.
Shall I take some feedback then, Steve, from our audience today?
Yeah, sure. Yeah.
So I've had some questions already on the chat. I noted your question. By the way, I can see some of my other board members appearing. Morning, Peter. I've had some questions through the chat. Roger, I noticed your question around hospitality, tourism and leisure, and whether we think that the support offered in the summer statement has further assisted that particular sector. I mean, I don't think it's long-standing enough support for that particular sector because it has been so badly hit. But I noticed the comment from Catherine on the chat box. What Catherine's saying is that the furlough has helped, the furlough bonus has helped, but that definitely needed extending, as you've mentioned, Steve, definitely needed extending for hospitality, tourism and leisure. And she believes the sort of the eat out scheme might help. Laura, have you got any thoughts, any comments? How's Coombe doing?
Yeah, I think the very difficult thing is the lack of guidance to do with events and everything, because that is obviously the core of our business at Coombe Abbey. So like Steve touched upon, we've been doing everything we can, afternoon tea collection and things like that. But in terms of what we can do in numbers in order for social distancing and to be safe and everything, we've opened the doors and we've been really happy and glad of everyone's support. However, for afternoon tea in the restaurant, we can only do sort of a small amount of numbers at selected times to stagger and for cleaning. So with no event space and no guidance that, we might be able to hold meetings of 30 people in December onwards or something, that's having a massive effect on us. So again, the furlough scheme has been a godsend. And since we've opened the hotel, we're looking at bringing a few more people back. So that has been a good thing. And we are looking at doing the food midweek offer. But again, like I say, I don't think it's quite enough.
Thank you, Laura. Is that what you're hearing then, Roger? I know you look after the wider Lloyds banking, but I know you're very close to Stratford-upon-Avon. Is that what you're seeing? Is that what you're hearing?
Mixed messages, really. So I think the hospitality sector is clearly because I've got a portfolio right across the sectors apart from agriculture, and hospitality is definitely the one that's lagging. Retail is making some inroads now. And what's interesting with retail is that whilst the footfall isn't as strong, they're having good days in terms that people are out buying, because if you're venturing into town, you're probably going to get something, there's an intended purchase plan. So they're doing a little bit better, if I'm honest, but it clearly, I don't have a lot of aviation. There are some manufacturers locally, but clearly it's hospitality and leisure that seems to be the big gap in the local economy, I would suggest.
Thanks, Roger. Anne and Rose, Burgess and Bullock, one of our longest standing strategic partners. Anne, what are you picking up in terms of, reflection on that summer statement? Are you picking up good vibes, not so good vibes?
I think it's difficult, Louise, isn't it? People welcome things. Some of it was a little bit gimmicky, I think, like, eat out, help out to eat out, and as several people commented me from the consumer point of view, you probably could have got just as big discounts on a Monday to Wednesday in most restaurants anyway, such that I'm not sure that's going to lead to a massive stampede of people going to eat out. I'm not sure it's really about the money in any way for a lot of people with the eating out, because a few people I know have actually gone to restaurants where they're being charged more, quite openly more, because of the lack of numbers that the restaurant can take, but they're happy to do that to support the business. It's more getting over the hurdle, I think, of people not wanting to go in the first place, and people are still, very, very nervous of that. And I think that's going to be the same, for all the hospitality and leisure facilities. And I think one of the things that makes it difficult for people is the more places you start to go, the more risk there is. You then get the phone call that says you can't go anywhere for a fortnight, even if you don't get ill. And depending what job people do and things, that's just not a possibility for people. So I think that, whilst necessary, is also going to hinder the recovery of that hospitality and leisure sector.
Yeah, okay. Thank you, Anne. I mean, that whole issue, isn't it, around that whole issue of opening up because of people wanting to be assured that everything is COVID-19 secure is such a big issue. But of course, for some of our businesses in the manufacturing engineering sector, that almost isn't a choice anymore. You know, they're having to open up because they've got to survive, they've got to sustain. And I know we've seen some of our businesses in our patch open up and actually, in terms of giving it a go, actually open up quite early. So I'm going to come to a few of our manufacturing engineers on the event today. And then don't worry, Sunny, I am then going to come over to you and we'll hear some of just a little bit more of the detail of the QES. And I'm not forgetting, I would like to come back, if you'll all stick with me for the hour, I would like to come back to Brexit. And possibly to some of the things around the skills intervention, maybe. But just to a couple of my manufacturers, engineers on the call. Tom, can I come to you first? You've opened, haven't you?
Yeah, subcons opened, but like most manufacturing companies, the downturn in automotive and aerospace, it's having a huge impact, and it's the volumes of work. And I think we all have a part to play in, you know, there was great talk of reshoring and shortening supply chains. And I think that's vital, but that momentum seems to have been lost. And with the mini budget there, the other day, manufacturing didn't get a look in, and to me that's a frightening concept. But I think what's unique here is it doesn't matter what industry you're in or whatever, everybody's suffering, and you know I take that everybody needs help, and how is that going to happen? And it's going to be a struggle. It's going to be a struggle for manufacturing, but in answer to your question, yeah, subcons opened, but business is down, and the outlook is frightening. There's no other way to put it.
Tim, I'm going to come to you, possibly to Paul, if you've got any reflections, Paul Sullivan. Tim, are you going to make use of the furlough all the way through to October? Are you looking at using the extension of that furlough now, which is the job retention bonus, if you keep people employed through to Jan, Feb next year? What's happening?
Yeah, very much. I mean, we opened up relatively early due to demand from our customers. So we were open up, not with a full crew, but we were opened in May. So we opened up in May and have been ever since. And currently I've got everybody back with a night shift on. However, in August, we will, I think we're going to put 3 onto furlough again, just to a drop in demand. I mean, it's shutdown period as well for manufacturers as well, which has come right at the wrong time. So we're just reacting with that. But certainly, very similar to Tom, you know, business is there, but it's the number side of things, and it has taken, it's certainly taken a hefty hit. Inquiries are up, which is positive. There's inquiries that we believe are being done in the Far East that are being quoted for here, but being quoted for here and the work coming here is a different kettle of fish. So yeah, very uncertain at the moment for us, but a bit of positivity that we're certainly not in the situation that I know a number of manufacturers are, where they're taking the decision to make people permanently redundant. So okay. We're not in that stage yet, but it'd be very interesting to see what things are like come October, November.
Okay, thank you, Tim. Paul, any reflections? And then I must move to Sunny and Emily. And as I say, I haven't forgotten the issue of Brexit. I've just noticed the comments from Karen Shooter, Exact Logistics. Karen's actually the chair of our rugby branch, so I will be picking that up before we end at 10 o'clock. So Paul, any reflections?
Again, I think until we see a true picture of where the economy is as at the end of the furlough and the support, I don't think that companies are going to be making any sort of long-term commitment to their business, because they don't really know exactly what's going to be happening. Certainly the automotive sector is badly damaged. There's going to be some critical decisions to be made, I think, at certainly Jaguar, Aston Martin's, Bentley, these McLaren are certainly, they're going to be making big decisions. That's going to have a huge effect on the supply chain, and the supply chain probably 3-4 to 1 against their employment. So it's going to be significant. So I think we've still got to wait until after October to get a true picture of exactly where the automotive sector is going to go.
Okay, thanks, Paul. All really, really valuable in terms of the work I do to try and influence those longer standing support packages. Okay, Sunny and Emily, I'm going to come to you. Let's have a look a little bit more at the detail of QES, and then I've got some more questions to pick up with our audience if you're all ready. Over to you, Sunny and Emily.
Thank you, Louise. Good morning, everyone. Thank you for taking the time out this morning to join us. My name is Sunny Parek. I'm the Senior Economist at Warwickshire County Council. This morning, we will look through the latest results from the Coventry and Warwickshire Quarterly Economic Survey. These are the latest findings for Q2, which is undoubtedly very interesting. Sorry, Sean, if you just go back a little bit. Sorry, no problem. Yeah, so very interesting, as it's the first full quarter that takes into consideration the impacts of the coronavirus pandemic. I'll begin by talking through the overall economic outlook index, followed by the domestic orders index, and then the overseas orders index, before passing on to Emily, our graduate economist, who will talk about how the employment, investment and cash flow, business confidence has fared in Q2. Okay, Sean, next one. Thank you. So yeah, before going ahead, it is important to bear in mind that the index scores that make up the QES are similar to those used by the Purchasing Managers Index. And so an index value of 50 is balanced, and anything below 50 suggests most respondents feel pessimistic or negative, and anything above 50 suggests that respondents are feeling positive or optimistic. Yeah, next slide, Sean. Perfect. So yeah, looking at the overall economic outlook index for Q2 shows a significant contraction from Q1, going from an index score of 59 to 29.2. This reduction reflects the extraordinary economic landscape that we have found ourselves in as a result of the coronavirus pandemic and the lockdown restrictions that were imposed by the government in March. These restrictions have weighed heavy on businesses within Coventry and Warwickshire's local economy, with both the manufacturing and services sector showing significant contractions within their individual economic outlook scores. Just looking at the service sector, economic outlook fell by more than half, from 60.2 in Q1 to 28.6 in Q2, with the manufacturing sector reducing from 54 in Q1 to 30.6 in Q2. Both sectors are now well below the 50 mark, indicating considerable feelings of pessimism with regards to their overall economic outlooks, as a result of both sectors experiencing significant interruptions to normal business operations during the lockdown period. Comparable falls can also be seen kind of on a national scale when you look at the PMI values for both sectors on a national scale. Yep, next one, Sean. Perfect, thank you. So yeah, the index for domestic orders in Q2 showed a record low for both services and manufacturing sector. The domestic orders within the services sector nosedived well below the 50 mark to 14 in Q2 from a previous of around 59.4 in Q1. This was driven by significant falls in both current and advanced orders, with their index scores coming in at 14.8 and 13.3. in Q2, due to the majority of survey respondents citing a decrease in both current and advanced orders. It's likely that businesses within the services sector suffer from limited opportunities to win new orders, obviously due to limited business activities and client businesses also putting staff on furlough, alongside overall reductions in consumer demand as coming as a byproduct of the lockdown restrictions. In terms of domestic orders within the manufacturing sector, that also showed a contraction to 20.5 in Q2 from a previous index score of 56.7. However, the manufacturing sector had not seen the same level of reduction as the services had. And this may be due to some manufacturers remaining open throughout the lockdown period. Despite this, there has been a decrease within the domestic orders index for the manufacturing sector, as most respondents reported reduced reductions in current and advanced orders, as we can see with the index points falling in the slide considerably in Q2. Once again, coronavirus and the lockdown measures have undoubtedly caused disruption to the manufacturing supply chains, demand levels, and overall output levels as well. Next slide. Perfect. So as with now looking at overseas orders index, as with the domestic orders, the overseas orders index has suffered greatly in Q2 within Coventry and Warwickshire. The overseas orders index for the services sector fell from 48.8 to 17.5 in Q2. 66% of the services sector businesses that responded to the survey were exporters, and most of which reported a decrease in both current and advanced overseas orders. Similarly, the overseas orders index for the manufacturing sector also fell to 23.9 in Q2 from 47.4 in Q1. Once again, so 83% of the manufacturing sector businesses that responded to the survey were exporters, and the majority of which reported decreases in both current and advanced orders once again. The significant reductions in the overseas orders index for both sectors show considerable pessimism amongst local businesses. This has more than likely come as a result of the restrictive measures placed by not only national governments, but also various global governments, including limitations on travel, and obviously business and factory closures around the world in order to protect workers' health and obviously limit the spreading of the virus, which has undoubtedly caused a fallout in global trade and therefore reduced export demand for UK goods and services, which is reflected within Coventry and Warwickshire and the overseas orders index for the manufacturing sector. Now I'm going to pass on to Emily, who will go through the remaining indicators.
Morning everyone, and thank you, Sunny. Hope you're all still with me. I know it's early. Like Sunny said, I'm going to go over the employment index, the cash flow and investment index, and the business confidence index. So can I get the next slide, please, Sean? Thank you. The employment index, like all other indexes, has been damaged this quarter. The resilient picture that we're used to in Coventry and Warwickshire has become diminished as businesses are starting to report their struggles. For both industries, reduced demand and limited capacity has meant reduced productivity, output, and as a result, need for additional workers, or in some cases, need for the current workforce that we have already. The coronavirus job retention scheme has in many ways been a lifeline for not only businesses, but local employees, allowing workers to keep their jobs and businesses to keep their workforce when the time to reopen arrived. As of the 31st of May, there were 109,400 employees on the Coventry and Warwickshire coronavirus job retention scheme. Some businesses have, however, struggled, meaning the last 3 months has meant redundancies and business closures. In the coming months, the outlook is equally as bleak as it becomes apparent that the withdrawal of sole government funding for the current workforce may be detrimental to some businesses as they struggle to meet the need for the necessary payments required. In the service sector, the employment index has fallen to 40.8. Key services, for example, healthcare, banking and transport, have had to continue during the period of lockdown as demand continues. Some service businesses have also had the ability to work from home over the lockdown period. This has meant significantly more businesses than in the manufacturing sector have seen the size of their workforce stay the same over the last 3 months rather than decrease, but not increase. This has put the service sector at a slight advantage, and when I say slight, I mean very slight. On the other hand, some service businesses have had to close completely. placing many workers on furlough or, in the worst case, carrying out redundancies and permanent business closures. Whilst the service sector has had a slight advantage, its functioning and labour force have still been challenged and compromised this quarter. The manufacturing sector has experienced the biggest fall in their employment index to 33.3. This is due to the impact of the previous 3 months having been particularly challenging, with forced closures and restricted supply chains. Some businesses have managed to redirect their efforts to help fight the COVID-19 crisis, making PPE and other medical supplies, but many have struggled and forfeited the need for the employees. Expectations over the coming 3 months where the labour force is concerned are expected to be equally as difficult, as many businesses are operating with reduced incomes and demand. The real challenge will come as the economy starts to reopen and the coronavirus job retention scheme phases out, requiring companies' financial input, which many businesses may struggle with. The effects of the coronavirus and the labour force can definitely be expected to continue through to the next quarter. Next slide, please, Sean.
Conscious of time now, guys, so if we can keep moving, because I want to take just a bit more input before we finish today.
Yeah, that's fine. The investment and cash flow index has fallen for both industries, but more drastically in the service sector. The government has provided billions of pounds worth of help in the form of the coronavirus job retention scheme, business rate holidays and loans, but many of these are being seen as future costs to businesses, some of whom will struggle to pay the usual overhead costs. The service sector has experienced a much larger decrease to cash flow. This is likely due to the nature of many service businesses that will have been forced to close completely, or some required to stay open with reduced demand, all resulting in them struggling to generate the income needed to maintain overhead costs. The manufacturing industry in the cash flow and investment index has fallen to 30.2, which is mostly due to their experienced reduction in cash flow as well. Over half of businesses reported that their cash flow had worsened, as many struggled to generate income to cover their overhead costs, even with the help of varying government schemes. Similarly to the service sector, there's been a reduction in capital investment, but the majority of training in human investment has stayed the same for manufacturing businesses. Next slide, please, Sean. Thank you. Business confidence has experienced the largest fall on record, with neither sector having an index above 50, showing a lack of confidence, as is to be expected. Across the service sector, the business confidence index has fallen, going from a higher point than the manufacturing sector in Q1 to a lower point in Q2. This is mostly as a result of reduced turnover, where over half of businesses reported a fall. 89% of businesses reported operating below full capacity too, making challenging times even more difficult. There is an expectation from half of businesses that there will be an increase in costs as we move into quarter 3 as well. The manufacturing sector has fallen to 39, slightly higher than that of the service sector, though it has struggled with 74% of businesses operating below full capacity, and feelings on profitability and turnover taking a big hit. Most businesses also expect costs to increase in the next 3 months as a result of raw materials mostly. Next slide, please, Sean. Okay, in summary, many businesses have not managed to survive the current crisis, and those that have weathered the storm, the damage is either starting to show now or is yet to be expected. It is clear that there are incredibly challenging times ahead, clouded with uncertainty, though the reopening of the economy is a solid start. Both industries have suffered, but the service sector has struggled the most at this time, or that's what's being reported. Having said that, both industries are at the hands of reduced operating capacities and other limitations. Some businesses may struggle with the new normal, but some may take advantage of new opportunities. What is important is that whilst COVID-19 is the current crisis, the impact of Brexit and an inevitable worldwide recession are still lingering in the background, blurring all future visions on what the economy and our future business space may look like. Thank you for listening.
Okay.
I'm not sure if there'll be time for questions, so we've put our emails on the last slide, Sean.
Okay, thank you, Emily. Thank you, Sunny. Perfect ending that you end on talking about that global outlook. If we could take the slides off, Sean, when you're ready. Thank you. That we talk about that global outlook and Brexit. So with just a few minutes to go before I will wrap up on both the challenges, but hopefully also the opportunities. David Hooper, are you on the call? Karen, do you want to comment on import-export global outlook?
Yeah, very very quickly, because I know you haven't got much time, just to say on Brexit, the border paper was released this week with the EU. I think that's a massive shock to businesses. And all I'm going to say at the moment is, if you haven't prepared for Brexit, you need to be doing it in the next couple of weeks, because we're running out of time now. And we're just about to, as you say, enter a worldwide recession, just as we're putting all our borders up with the EU. So not good timing.
Karen, do you want to come in? Or are we okay? Karen Shooter? No, okay.
Okay, sorry. Yeah, I'm very much on board with David, but we're very worried about the physical impact. You know, there are going to be queues at Calais, at Dover. We're just not going to be able to bring in the goods that British industry desperately relies on to actually manufacture, to either re-export or supply the domestic demand.
Okay, guys, and I promise you I've been watching all the comments on chat. We've had a lot of comments throughout the hour around the local authority cash grants, and we're going to take those up offline, and where we can help you on your local authority cash grants. If you need help, then I think I'll pop my email address on the chat box. We will help, and we do help our businesses. Just some wrap-up thoughts from me, and thank you to Phil, who on the chat box actually said, well, what do you think, Louise? What do you think the outlook is? Well, my thought is all about what we can learn from this, because we do have to learn from this. Somebody posted on the chat box that, you know, what do we do if there's a further hit, if there's a further wave? We have to learn from the experience, and my learning is very much, and I know this will sit very much, certainly with our manufacturers and our engineers on the call. My learning is that cash is king. We've all learned that. Cash is king, and confidence is critical. And what we need now is consumer confidence and business confidence coming back into the economy. And we all understand that that has to be stimulated, obviously, from our partners, from our government. But confidence is king. I've also learned, and I know some of this won't sit with all of you, but I've also learned that the more resilient companies are those companies who do think about importing and exporting. They tend to be more resilient companies. They tend to have more survivability. I know that's a hard message for some of you who just don't see import or export as an opportunity for you. And if you do think like that, come and talk to us, because we may be able to change your mind. You know, we're looking at a global downturn, as well as obviously a UK downturn. We're looking at a situation that is unprecedented, it's unique. Personally, I think that the package of support that has been thrown at the economy by the government has been humongous, has been well received, and again has been unprecedented. But I also know that we have particular sectors who are going to need more long-standing support, not least manufacturing and engineering, automotive, aerospace, but also hospitality, tourism and leisure. In terms of the global outlook and the recovery, I actually think the recovery is probably looking at a 2 to 3 year recovery. I don't think it will be an early recovery in the next 12 months. I think it will be longer than that because of the global impact. But to end on some positives before we run out of time, and my positives, and I hear this when I talk to partners and I see it in the data that I see, my positives and my opportunities lie in the fact that I think and I believe the West Midlands will come out of this downturn quicker than some other regional economies. Now, why do I think that? Bearing in mind we have been very hard hit because we've got such a large manufacturing and engineering sector. We've got a huge hospitality, tourism and leisure sector, particularly here in Coventry Warwickshire. Why do I think we'll come out of this sooner than others? I think it's because there are windows of opportunities, and those windows of opportunities are the City of Culture 2021-2022, the Commonwealth Games 2022, the £3.2 billion ask of Andy Street into government, and I'm already starting to see some of that ask being delivered to him and to the region. Some of that being, for example, investment in infrastructure. I think we need to remember that the West Midlands is the largest importer-exporter outside of the South across the whole of the UK economy, and that makes us more resilient. resilient. And also I saw some data just in the last couple of days that reminds us that, again, outside of London, outside of the South, the West Midlands at the moment is the area where there is most FDI, foreign direct investment. So we are still attracting foreign direct investment into the West Midlands, and that is all good for all of us as businesses sitting in all sorts of supply chains. I know we're facing huge debt. I know we've got that 300 billion looming, and all I can promise you is that on your behalf, all chambers of commerce will be saying very clearly to government that as we progress over the next few years, the next 3-5 years, you cannot always look to business to pay that debt back, because businesses are the wealth creators of this economy. We create wealth, we create jobs. Don't keep hitting us with tax. We have to think perhaps a little bit more creatively how we deal with not just a UK debt position, but actually a global now debt position. And I think that's just going to take some creative thinking rather than the usual fiscal routes of hitting businesses. So we're here for you. We're your voice of business, and we keep going both in terms of helping you during crisis, but also now, hopefully, as we work with you towards a recovery. And I do believe we will see that recovery earlier across the West Midlands than elsewhere in the UK economy. So guys, thank you so much for joining us. A big thank you obviously to our speakers. Thank you, Sean. Thank you, Chris, as always, for putting on these useful, these really fantastic events. Thank you to Steve from Prime, our sponsor of QES, great input. Thank you once again, Sunny, Emily. We're always reliant on our county council to give us really good interpretation of our data. Really, really useful. If any of you need support, need help, you know where we are at the chamber. Just give us a call or drop us an email. Have a really fantastic day. Thank you, everybody. Thank you and goodbye.